Zscaler just released their quarterly numbers, a double beat. Stock is up 17.3% at the time of making this video. During the day, the stock was down actually 4.7%. There has been some extreme weakness, as you can see, in the last 3 months since the other earnings report. The stock was down 35%. Now, I covered Zscaler 2-3 days ago in the oversold video. I covered Zscaler and Ulta, and I said it is going to be an up or down move when they report earnings. In this case, the move is up. Ulta, I believe, is also up around 13-15% or so. But with Zscaler, as we've covered that 3 months ago, it didn't really make much sense. I think there was a lot of profit taking, but overall the business was still doing quite well. Of course, the stock became cheaper, as you can clearly see. Forward PE, EV to EBITDA, price to sales, price to free cash flow. All of those metrics are lower than the 5-year mean by quite a lot. Why is that? Well, the stock has maybe appreciated, but the business itself has grown quite fast on all fronts. Now, as we've seen previously, right, the average analyst price target sits 56% higher than the price we're at today. Of course, with the after hours action, it's going to be a bit lower, but then again, tomorrow we're probably going to see quite a lot of analyst upgrades, which is funny because in the last couple of weeks, analysts have been downgrading the stock. The average analyst price target was $256 in mid-May. Right now we're at $244, and yet nothing has changed in those 2 weeks, but tomorrow you will probably see the average analyst price target quite higher. Why am I saying this? Well, I'm saying this because we're playing a game here with Wall Street. Just because some analysts are suddenly turning bullish or bearish doesn't mean that the long-term thesis has changed, especially not in this case with Zscaler. 1 quarter should not change your overall thesis. And 3 months ago, nothing showed investors that suddenly the thesis has changed. No, maybe the stock was a bit more expensive previously. Stock performance, well, the business performance was maybe not as high as expected, and so you take a breather. We've seen that across the board with plenty of other companies as well. Just because the stock is down does not mean that the business is not doing well. The business can do well, but sometimes the stock has just run too far up too soon. It can happen, and it will happen in the future again and again and again. That's usually when you should be buying the dip. You should be buying the dip when the business is doing well, but the stock is not following the sentiment, which is fine. Anyways, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I'll start off here with a short comment from the CEO. We delivered an outstanding quarter driven by growing customer interest in our Zero Trust Exchange platform. As threat actors evolve and continue to exploit firewall-based security, Zero Trust security remains a top IT priority, and an increasing number of enterprises are adopting our platform. To meet this demand, we are accelerating innovation, expanding our platform, and building a strong go-to-market team to scale our business to $5 billion and beyond in ARR. And so, for the quarter, the revenue grew 32% year over year to $553 million. As you can see, beat their guidance and beat Wall Street's estimates as well. Calculated billings increased 30% year over year to $628 million. Calculated current billings increased 29% year over year to $613 million. Gross profit reached 81.4%. Operating profit $122 million with a 22% margin. EPS 88 cents increased 83% year over year. Free cash flow $123 million, and that's with a 22.3% margin, and they actually beat free cash flow estimate by 58%. With regards to dollar-based net retention rate, that still sits at 116%, a bit lower than last quarter. I believe last quarter was 118% and 119% 2 quarters ago. So it is coming down, so we should keep an eye on that. There are 523 over $1 million ARR customers, 91% operating profit year over year growth, 27% free cash flow margin for the trailing 12 months. And with regards to where their revenue is coming from, 54% Americas, 31% Europe, Middle East, Asia, and 15% Asia Pacific. And I believe this is what Japan, the J. Correct me in the comments below. With regards to their momentum, well, it's certainly with the large customers, as you can see right here, over $1 million ARR customers, increasing faster than the 100K one. They say here that there are over 50 plus $5 million ARR customers, over 40% Fortune 500 customers, and over 30% Global 2000 customers. With regards to the profitability side of things, improving operating efficiency, gross margin is up, operating margin is up 677 basis points year over year. Free cash flow margin is up from 17.6% to now 22.3%. With regards to guidance, they slightly beat Q4 revenue estimate and they beat Q4 EBIT estimates by 1.4%, beat the EPS estimates by 2 cents. So right now, they did update the guidance a little bit. So they expect revenue to increase approximately 32% year over year, calculated billings to increase 28% year over year, operating profits margin to be up to 490 basis points year over year, and that's all for the fiscal year 2024. With regards to Q4, which is their next quarter, revenue to increase between 24 to 25% year over year, gross margin to be at 80%, operating profit between $107 and $109 million, and earnings per share between 69 to 70 cents. They say here that in Q3, they landed a 7-figure average contract value deal with DoD. 12 of 15 cabinet-level agencies are our customers, and we continue to see strong opportunity across the entire federal market. They're building a strong go-to-market team to scale us to $5 billion ARR and beyond. Zscaler is a destination for top talent. We are hiring experienced leaders and reps to capture our large market opportunity. Because if you go down to the operating expenses, it has increased quite a bit year over year. The majority of it comes from R&D, as you can see right here. And so right now, looking at the stock, RSI was pretty low, but with the after hours action, of course, tomorrow when the market opens, things can be different. But it seems like we're going to open if the price stays at $182, just under the 50-day moving average. The 200-day one sits at $185.9, and the 20-day one, which will be under if we stay at the $182 mark, the 20-day one sits at $175.2. So I would say keep your eyes on these moving averages throughout the day. Of course, this is on the weekly to see whether or not we can finish the week above those. So to conclude, another strong quarter by Zscaler, and in this case, the stock market reacted positively. Of course, in the last 3 months, in my opinion, down 35% was a bit of an overreaction, but then again, it's a big opportunity for long-term shareholders that hold these companies and want to add more at cheaper prices. Zscaler is not a company that has been around for 10, 20 years or so. No, it's a pretty young company, but it's still growing extremely fast, free cash flow positive. It's going to be profitable, extremely profitable in my opinion, sooner rather than later. So, I mean, if you want to have exposure to this type of industry, the cybersecurity industry, zero trust specifically, I think this one is a winner. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye bye.